Hello, hello, and welcome to April 12th Alphas Adobe at 89%. There it is, 89% for Adobe, and here it is. And Adobe did finally close above a third ratio, so we are now at dipper low exit. The exit was down here for the longest time because we hadn't closed that third ratio, but now that we have closed that third ratio, we are now way up here at dipper low. Higher low, lower low, higher low. The lower low comes in at 492 and 60, and we come in with, I shave off just a nickel. My buffer, some schools buffer is 10% of the ATR. Some schools is 1 penny. Some school is no buffer at all, right on the line. I'm more toward just rolling it to the nickels, zeros and fives. So there we are with our exit. And here it is, 412, 3-1 close, dipper low, exit at 492.55. So the journal is now up to date. This is my online journal. And here are the rules for the exit. First ratio was here. Now the close is greater than the third, dipper low. That's what we got here. And look here, we are 89%, so we're 11% more. We can go to ROI 100, which would be last bar low, which will be the low of the day, of the preceding day, becomes the exit until such time that we exit the trade. Also note that if this was by chance to take off at 150%, then the result was that we would then be looking at a exit high, exit high low. All right, what that means is this: on rule number 4 of the exits, I reach 150 here close, and then I have to make a decision. Do I want, if price opens above, take me out, or if price closes below the high and takes me out. The advantage of it, or they both each have their advantages. One is taking profit right off the high. I mean, it's 150%. And 100% could be a pretty penny depending on how many more contracts you have. Right now here, this is sitting at 510. So let's say imagination that 100 ROI is 550, and then if it opens up higher than 550 and we do the high exit, the result is that we could take off more. We'll take off a good chunk off that ode of 1637 right there. The other is that you want to see how far it will run. Then you say, okay, if it falls below, and the close here was 506.03, so I would go, I want to take that money off, because you don't know if it's going to gap. It could gap higher, and then it'll be perfectly fine. And say anything below 506. If you open and are below 506, take me out, and then it's over, and you take the money off the table. That's what our fourth rule is here, our RI 150. All right, so that explains that. Let's go on now to KR. So that was the lesson of today, was following the rules. So on KR, we have KR, we are above the third ratio. Now look here. Here is the higher, here's our dipper low right here. And here's another, here's our first dipper low. And then we did our buffer. And when the next dipper low came up, the exit, the results was lower than the 35.53. Rule number 4, exits do not retreat. That's it. Exits do not retreat. So we are going to be up waiting for the dipper low to occur in this region. My anticipation that we hit a doji here could be, we have this doji. Look here, we have a doji, then finally had a dipper low, and then continue on up. So anticipation could be we have this doji, have a dipper low, a higher low, and then we'll be able to move our stop up to the next dipper low until this trade will take its own self out. What's really cool is that we are at $335 against an O of 2142. Also note, a lot of these are just very small contract numbers, and the reason why is because of the fact that this is not a large account. So the allocation is 10%. I forgot one thing. I think I should back up on something else too, on the Adobe trade. Let me back up on the Adobe trade, and I need to point this out because I usually do not use this. Do this. This had a delta of 15. Yes, it was a delta 15. I am not a great fan of low deltas, but guess what happened? And it was that the option, according to what we had an availability of budget right here, we had enough. At delta 15, we found a beautiful A and B ask bid spread, very tight, less than 10%, and we found an option at 570. And that's budgeting. You cannot be going out and buying. Okay, like that option is that I have a buying power of, let's say, $1,500, and the option is $13. So it'd be $1,300 off the buying power, but at 1,300 is 20% of the 10% allocation. How do you do the 10% allocation? It's very simple. Just show the first three numbers, change the comma to a decimal point, and that says right there the maximum ballpark figure on the high of the option is $6.28. So I'll be looking at options at $6.28 or less. That's what happened here. When we came here to do this, this was running around 5,000, around 5,700, 5,800, and we found an option within our pocketbook at a very low delta. But the indications were from the software that I used to evaluate to take the trade said, hey, it's uptrending, it's a buy zone, and the implied volatility was only a 2. That is all ballpark to say, hey, take the swing, batter up, got a good pitch, take the swing. And it's worked out well for us. It's worked out well, 100 ROI. And also to bring this down, remember, Adobe's only 1637. 1637, and we're able to clear $500 or better off Adobe. The end result is we're going to be, this will fall somewhere around $1,100, plus or minus a few dollars. So that'd be kind of cool. All right, so now we'll go ahead and continue on. Now we have Capri in third place, and here at Capri, it's struggling to make its way. So it's come off this bottom, and it's nice, making a nice move upward. It is at 30%, and we are just below. We're right almost in the middle of the second and third, the first and second. See, this is first ratio, second ratio. So this is the third ratio marker. So first, second. So we're between the first and second ratio. So that's Capri, and Capri owes a lot of money. And if you went to previous videos, this owes a lot. So this is like we're chipping that rock. Rock becomes pebble, pebbles become profit. Okay, now comes on now to T and AT&T. And AT&T, we have a pullback, but we're now entering a doji zone. Look, this is very important to understand in reading candlesticks, not to panic. And that is right there, doji zone. We're entering a doji zone, so it's very feasible that we might come down, have a little bit of support down here, and come back up. We saw that right here. Look, price came down, stopped, came back up. Price came down, so price is the flatlining right here in the short-term price channel. Okay, that takes us now to Walgreen, our last number, our last positive position of Walgreen, and this is the we were within $3 a few days ago, but it fell back, but it looks like it's going to be some moving up again, going in the up direction. And that is a conclusion of today's report, with the alphas at 13.7 versus the SPY at 10.4. And with that, thank you very much for stopping by and checking it out.